The global energy market and geopolitical landscape experienced intense volatility today, May 26, 2026, as a series of conflicting military and diplomatic actions unfolded in the Middle East. Overnight, United States and Israeli fighter jets launched a series of targeted defensive strikes against several Iranian military vessels and anti-ship missile sites located just south of Larak Island in the critical maritime choke point of the Strait of Hormuz. According to official reports issued by U.S. Central Command, CENTCOM, the precision strikes were executed as a measure of self-defense after detecting immediate threats from Iranian Revolutionary Guard Corps (IRGC) units. The military stated that these units were actively setting up mobile missile launchers and deploying automated naval mines to further reinforce the blockades that have severely crippled global shipping since the outbreak of open hostilities in late February 2026. This dramatic military escalation occurred at a highly sensitive time, coming just hours after U.S. President Donald Trump publicly expressed optimism regarding behind-the-scenes diplomatic negotiations. Speaking to reporters, the president had suggested that talks aimed at securing an interim ceasefire agreement and eventually reopening the Strait of Hormuz were proceeding nicely. The jarring contrast between hopeful diplomatic rhetoric and sudden kinetic military strikes highlights the immense fragility of current negotiation efforts. International energy markets reacted immediately to the news. Brent crude oil futures, which had been showing signs of stabilization on hopes of an imminent diplomatic breakthrough, surged by more than 1% in early Asian trading hours to reach $97.32 per barrel, reflecting the deep-seated fears of sustained supply disruptions across the globe. The crisis has imposed a severe structural strain on global logistics and supply chains. The Strait of Hormuz, which normally facilitates the passage of approximately 1/5 of the world's total petroleum consumption, has been effectively closed to standard commercial shipping for nearly 3 months, while a newly established multi-tiered clearing mechanism managed by the Iran-Persian Gulf Strait Authority (PGSA) was recently announced to allow limited, controlled transits under heavy military escort. Major international maritime operators continue to bypass the route entirely. Industry data provided by global tracking firms like Windward AI and organizations such as the International Maritime Organization (IMO) confirmed that only between 4 to 12 highly specialized vessels successfully transited the strait today. The overwhelming majority of commercial shipping lines are choosing long, expensive detours around the African continent due to prohibitive war risk insurance premiums and the unpredictable threat of naval skirmishes, embedding systemic inflationary pressures into the global economy.